There is a common misconception between the fascination of flying and airlines as investments. In this video, I will show you the 5 reasons why investing in airlines might crush your portfolio. Hi, my name is Till and this is the channel that shows you how to invest intelligently and easily and how you build up a fortune also as an ordinary person with a normal job. There's a well-known joke in the investment community about investing in airlines. How do you make millions with airlines? Start with billions. Although it is not really that funny, it actually says a lot about investing in airlines as an industry. But why is that so? There are at least 5 major drivers that tend to make airlines terrible investments. But lo and behold, there is no rule without an exception. I actually once invested in an airline and doubled my investment. Make sure you stick around till the end because I will tell you why a very few airlines broke the pattern and did surprisingly well. Reason number 1. Highly exchangeable product. Do you remember the last flight you booked and that you paid for yourself? Ask yourself, was there any other reason that drove your decision for a specific flight other than price and availability around your desired flying date? The vast majority of you will answer this question with no, there was no other reason. And this is exactly the problem for the airlines. Flying became a commodity. The planes itself, which are a major part of the flying product, are coming from just a very small group of producers and don't make a difference for most of the consumers as they are very similar. Above a certain size, the market today is pretty much shared between only 2 companies, Airbus and Boeing. Yes, there are minor differences between some airlines. The one airline is serving better food. The other one might have planes and an interior design that feels a bit more modern. But let's be honest, we notice and we like it when the food is better. But most of us won't be influenced by this for a second if we find another flight the same day but 10% cheaper. And as an investor, you have to ask yourself, why is the airline you want to invest in going to perform better than its competitors in the next 5 or 10 years? If my channel were bigger, I would probably get a lot of hate for this, but I believe that for most of the airlines, it will not be the product that will give them an edge over the competition, because the consumers will get nearly the same product at the next airline. Reason number 2, political influence. There was a time when many countries had their own airline. This was because flying once was highly modern and it was a status symbol for a country to have an airline. And it once made a country, and especially its elite, much less dependent on other countries who already owned their airlines. It was supposed to boost the economy as it connected a country very quickly to the rest of the world. The general problem I see with political interventions for specific companies or specific industries is that it changes the competitive landscape. It is making the economical development less predictable when states and politicians meddle with the forces of the markets. When an airline receives benefits like, for example, subsidies or valuable landing slots on certain airports, it will have an advantage over competitors who don't receive this. And this is making it much harder to judge where your investment will be in 5 or 10 years from now, if the rules of the game change every now and then. The flying industry changed a lot in the past 30 years, but a part of this thinking survived until today. The German politics still feels that it has to intervene if Lufthansa is getting into economic troubles. And don't get me started on the political interventions for the plane producers Airbus and Boeing on both sides of the Atlantic Ocean. And some Arabian states fuel their airlines with billions and billions of petrodollars. Reason number 3, sensitivity for single events. The flight industry is surprisingly sensitive for single negative and unexpected events. The Lebanese-American essayist, former trader and risk analyst Nassim Nicholas Taleb called and described them in his famous book as black swans. Just look at the past 20 years. The terror attacks from 9/11 2001, The whole industry came to a stop. The economical crisis of 2008-2009. Oil prices suddenly went up to $140 per barrel. Most airlines lost money. Several of them went bankrupt. The 2010 eruptions of Iceland's volcano Eyjafjallajökull brought air travel in Europe to a halt for several days. The outbreak of the coronavirus in 2020 and the corresponding lockdowns everywhere in the world crashed the global flight industry. Faulty new jets. The new Boeing 737 MAX had been grounded for more than 1.5 years after a faulty system caused 2 fatal crashes. This was then resulting in a production and delivery stop, affecting the producer Boeing and several airlines all over the world that were planning with the new planes. And there are further risks on the horizon. Especially the climate change will increase the costs for CO2 emissions and consequently for airlines. All of these events can be viewed as one-time events, but the flight industry seems to be affected by a lot of these one-timers that every time have a huge effect on the businesses of the whole industry. And this effect works even more in combination with reason number 4. Reason number 4, capital intensity. It takes a lot of capital to run an airline. For example, the costs for a Boeing 737 MAX are around $120 million per plane. A 787 Dreamliner costs between $250 and $300 million, and a Boeing 747 Jumbo has a price of more than $400 million per plane. The ratios for the CROIC, the cash return on invested capital, are a catastrophe in the industry. In combination with the just mentioned sensitivity for single events, it is increasing this problem even more. Because when a company needs to pay off their huge amounts of debt by keeping their planes in the air as often and as long as possible, every interruption is going to drag heavily on their costs. Reason number 5, the passion of flying. Do you remember the movie The Aviator with Leonardo DiCaprio? It's a great movie where he portrays the flying enthusiast and entrepreneur Howard Hughes, who built up a big airline and drove the development of a whole industry for a long time, mainly driven by his own love for flying. He might be a lighthouse figure in this industry, but there are actually a lot of people who feel a similar fascination for and obsession with flying. I realized this already myself when I was studying and shared an apartment with a friend who was also extremely passionate about flying. The problem is, surprisingly many of these people one day start ventures in the flying industry to turn their passion into a venture. And this is increasing the competition and decreasing the margins for the whole industry, which might be good for consumers, but it is in the end not good for investors. Before we come to the one exception to the rule that actually made me a lot of money, it would be great if you leave a thumbs up in case you liked the video. Thank you. The exception to the rule. I actually once bought stocks of the airline Ryanair and was even successful with it because I nearly doubled my invested money. This was by no means pure luck because Ryanair is doing something differently than other airlines. They basically copied the business model of the US-American low-cost carrier Southwest Airlines, who was the first airline with an extreme focus on costs. And they brought the no-frills and low-cost attitude to an even higher level. They pulled in passengers with their industry-breaking prices and then charged for every extra that the passengers wanted to have during the flight. They operate only one type of plane, the Boeing 737, which decreases the costs for training employees, increases economies of scale and decreases complexity costs. They placed their orders for new planes often when the markets for planes were down. For example, after the terror attacks of 9/11, and generated massive discounts on their orders. They also didn't pay their employees as well as other airlines. I once read that a pilot with an old contract at Lufthansa received 3 times more than a Ryanair pilot. They manage their turnaround times much better because only a plane in the air earns money. And their airport network usually contained cheaper destinations that were just about in the area of bigger and more interesting destinations. When the products of an industry are highly exchangeable and don't really have an influence on the decisions of the consumers, then the company will win and grow that is able to offer cheaper prices than everybody else by still earning money. If you liked the video and if you want to know how to build up a fortune just by quitting to smoke, you should watch this video here next. See ya!